Let me know. You saying, boys? Mem Cam T, what's good, biz? How we doing, man? How the fuck are we doing? I didn't place this today. I mean, last week was my last week, as I said, and I wasn't looking to place anything today, and we had such a good day in the hindsight of things. We had such a good day. The morning was painful, but then we had volume start kicking into the markets. 8 o'clock. And that's when we saw the actual expansion, well, a bit after that. The big expansion around here, 8:30. There was definitely potentials to get in. Junior was good, my fucking son. Fletch was good, Bills, what we saying, had the exact same trade marked out. Yeah. Man, honestly, perfect ALG. Perfect ALG. But yeah, I didn't place this. Last week was my last week, and even like when we was watching this morning, we had no movement, like for ages, and then we had 8 o'clock come about, and then we actually had a big volume move, which when price was looking to continue down, I thought we was gonna look at a bit more of a bit more of a weaker euro just to complete CRT on EG. To take out a bit more liquidity for EG, because EG feels like it needed a bit more of a catalyst, because I really want to know if EG is coming up right now or if it's going down. That's what I want to know, because we've had the same bias, but it's just been overbought. So that's why we've had sort of favoured sells for the last few weeks, but we are still bullish, right? We are still within a bullish range on EG on the 15, so we are still bullish on EG, but we needed a catalyst to start that continuation back up. So when price did actually continue back down at 8, I honestly thought we was just going to see EU come a little bit lower, but we actually had a perfect EU ALG playout. DTO, GU was good, but it was more the Asia session, right? The Asia session was perfect. Asia session was perfect. On EU, on GU, on EG, not on gold, not on the yen, fuck me, and dollar, yeah. Exactly what we wanted to see from Asia session. Nice and accumulative. We haven't seen that in a bit, and we had a lovely ALG player today, which is, I know I'm not in it, but again, continuing to see ALG play out is key for me. I think that's again what makes me feel a lot more confident with ALG, because it plays out a lot, man. Just because you didn't get in, it still plays out quite a lot, which I do love. Just seeing that confluence for a trade for the Asia session, knowing that the Asia liquidity sweep is still happening, is fucking key. I mean, it's gonna happen for years to come. I mean, it's been a thing for years, and will continue to be. Yes, Warren, what we saying, bro? Yeah, EULG are perfect, man. I expected price to come down for imbalance, and also why I didn't enter. For me, bro, last week was my last week. I said it, and again, even still, it's Monday, and I probably wouldn't have jumped in this anyway. Purely off the fact that it's December and it's Monday, like, it's just not optimal at all. But again, you're gonna miss some trades like this, which is fucking fine. Again, I feel like even me trading the first two weeks of December was definitely me pushing it. All I managed to get was one trade out of those 2 weeks. But I still think I pushed it. Because I haven't traded December for the last, like, 2 years. It's really actually a bare good time to go away, but I feel like December you kind of have to be with family. I don't know why. I don't know why. I feel like you just have to, innit? But I did kind of see expect price to come a bit lower, but we had this perfectly played out. It's below Friday 50, so again makes sense in terms of the Friday range. But yeah, I said I'm done for the year last week, so I'm not gonna let my emotions get the better of me, man. There was a few opportunities today. There was when do you look to go back into Jan? Midweek Jan. Midweek. Mid Jan, really. First 2 weeks I normally let play out. 'Cause it's always great to just understand the news again. Because I'm not going to be back. I mean, I'm still going to watch the news, obviously, but we've still got data that's come out. That will come out early January. You're probably going to have a lot of the Fed chair news as well coming around the start of Jan. And interest rates. Continuation of a full year. Bro, what? This guy Bear looks like, I can't remember his name. And now I forgot what I was saying. Fuck! Wait, hold on. I need to see. This guy Bear looks like, what's his face? I just need to get this guy first. I know I completely went off, but this guy on Bloomberg looks exactly like. It's actually comedic. Let me go back. Of course he works. Of course he's like high up in Adobe. Oh, I can't remember his name though. I'm not gonna be able to find him. What was I saying? Sorry. Yes, Tommy. What were you saying, bro? I'm not gonna be able to remember his name at all. I'm not gonna be able to remember him at all. But yeah, first 2 weeks of January, bro. That's what I let play out when I can understand a bit more news, and then sort of ease back in. February's normally when liquidity starts building back up, but I like being in the markets. Probably won't start placing trades till probably February, but I'm gonna be still like in the markets quite heavily throughout. Sort of midway through Jan I'll start. Pretty go away start of Jan. I feel like it costs quite a lot. Surely flights are bears like start of Jan. Is that a big time to go away? Is that a peak time? Now the big news at the moment, which is pretty key, is where the dollar's at right now. So we'll go back through all of the currencies that we need to understand where they're at. So I mean we've kind of got the same as what we had last week. There's not much massive. Well, there's nothing that's come out today. Nothing that will come out today. It's more that's going to come out tomorrow, Wednesday, and Thursday. But the US dollar is still looking to cut interest rates. So that's their most important thing right now. They're looking for a cut of interest rates, which obviously is going to devalue the dollar. We've seen Labour's weakened, so weakened Labour, which again just does sort of push you towards that weaker dollar. And again, the cut was, I mean, this cut was looking to be hawkish. But we are looking quite bearish, or dovish, as they say, for the last cut, purely for the fact that Labour is dreadful. Labour just come out poor, and he's looking to come out continually worse. So we're still very dollar weak. That is like the market right now. We're still quite dollar weak. Growth is sort of slowed down a bit as well. We're going to see what we're going to get for inflation tomorrow. Sorry, I think it's Thursday. Is it Thursday? It's a massive week, to be fair, this week. Is it Thursday? Yeah, Thursday with inflation. So we're going to see how that comes out, and that's going to sort of help us for whether we for definite cut or continue these cuts into 2026. Because if inflation comes out too high, then we're going to see it quite difficult to cut interest rates. But even still, Labour is still very weak, so they need to tighten that back up, which would massively help through cutting interest rates. I mean, they're the most things to really know about the dollar right now. I can't talk anymore unless we've got more inflation. They are. Pound. A big week for pound this week. Obviously, we've got probably the biggest news, sorry, should I say. We've got GDP. Which is low as fuck. One thing about us, poor GDP. We actually got claimant count, which is coming out better this time. Claimant count last month came out dreadful in the UK. We had so many more people getting put into benefit, which is dreadful. I mean, we don't fucking want that. So, I mean, I'm kind of not surprised that we've had a bit more of a rebalance for that, because that number was disgusting. How many people we had jump into? When do we have that? That might even be tomorrow. Claimant count. Yeah, claimant count tomorrow. It's coming back down from 30k. Inflation Wednesday. Inflation's looking to come out a little bit lower, which I guess kind of really does help us when we are looking to cut these interest rates. But again, we're in the same stance as the Fed. We're quite dovish with cuts. I don't think there's any hawkish cuts in the moment, man. I don't think we're going to see any hawkish cuts in the moment. I think most cuts we're going to see are going to be dovish, so we're going to see continuation of these weak currencies that are looking to cut interest rates, like the pound and the dollar. I mean, the pound has held itself a bit. I mean, even just looking from EG, we can see that we've mainly had a bearish print of price now. Bullish print of price throughout the whole day today. Throughout the whole of like New York session continuation and the end of London. What time is this? 9:45, so not the whole day at all. From about there. So, but that's the thing with the pound. We see it so strong at times, even though data is telling us it's so weak. So that's the thing that we like about the pound. Look how strong the pound is. I mean, luckily this is against the dollar, which is really weak. But even still, I'm putting together two currencies that are both looking to cut interest rates, both with weak growth, and also both with bad labour, right? So that's why it's kind of mad that I'm seeing GU be so bullish, because I'm so weak on both the currencies myself, both economically. So we can see the dollar is just getting damaged heavily. This is kind of why I'm weak dollar, because we're just so weak dollar. The market is so weak, and the market isn't oversold yet at all. The market is not oversold. The market is still looking to sell. Still looking to sell the dollar. And I think that is just going to, again, continue into the new year for at least the first 6 months. Depends what we see on interest rates. You might see a little bit of a bounce up, but we're still looking at a main weak dollar, which is crucial to understand right now. In these markets, the best positions for you will be EU buyers. I've said it every fucking day I'm on stream, innit? The best positions you can get in right now in this market, and not overcomplicating, just focusing on these trades. What I mean by these trades, I mean these pairs and one certain position, long or short. EU, we want a long, and then EG, we also want a long. The reason why is because we essentially just want to take advantage of that strong euro right now. The euro is stronger than the dollar, the euro is stronger than the pound in terms of the current strength. The dollar is really falling off as a currency. And we're just going to continue to see it weaken realistically. We should do anyways. I mean, look at it on a daily time frame. It's so weak. And bearing in mind, we was already weak in the grand scheme, and now we're sort of on a short-term value perspective, heavily weak. This most recent range, we kind of rebalance back into ranges, so we can see how weak the dollar is. So taking advantage of that is so key, boys. I mean, take advantage of it how much you can for the rest of this year. I mean, I don't know how many positions we're going to be getting like this, because that shit's in... That fucking EG was unreal, wasn't it? Like, this EG is exactly... Sorry, this EU is exactly what you need. And we're continuing up. Why? Because the dollar is so weak. Prior day high, prior week high could have been some insane TPs today. This is the same bias I've had for... Mate, like, literally the whole fucking year, innit? Like, I've not changed this bias the whole year. And the euro has been coming up, and we're looking for the same bias going into the next 6 months. And this is why these type of positions are the best, if you was able to get in this. Lovely stuff. It was unlucky that EG wasn't able to come to the CRT. This is what we was looking at this morning for EG. It is what it is. It massively is what it is. If you was looking to long at that 4-hour CRT low, which I would have said is a good trade, considering it would have been a little bit scary coming into this order block. But I mean, even still, I think we are ready to come up a bit more on EG now. We definitely have that stronger euro, as we can see. GU's boomed. I mean, fucking hell, GU's continuing. I mean, it's not... Where's the prior week higher? Prior week 50. Right there, our prior week high's up there. EU's already had a couple of pip-ups, man. Do you think EU can hit 1.2? This is the thing. I think, and this is what I've heard. I've heard a lot of... I've discussed the euro with a lot of traders, with a lot of people, man. And a lot of people think that the euro USD is going to sort of go to the 1.5 area at some point within the next few years. I had a few traders at the start of the year I was talking to. These are traders that I've been speaking to like my whole time of trading, and they were looking at long euro against the dollar. Me and Stu was discussing this at the start of the year, and I looked deeper into the euro and realised that we are decently strong with the euro. Growth is decent in Germany. Growth is. We had a few hiccups with France because we had massive political uncertainty this year with France. But the euro has still been stronger than the pound over the course of the year, and been stronger than the dollar for the whole entire of the year. Early next year. The thing is, this is the thing, bro, because I don't like say I can't really say that. The reason why, because you have no clue what's right around the corner. And a country like, well, I say the country, the thing with the euro is that it's supported by a lot of countries, and a lot of countries do have quite a big heavy. Well, depends what countries, but some countries have a heavy effect on the European, or the euro's value. So again, if we come across any other like French political uncertainty, you're probably going to see a lot of people draw away from the euro for a little bit temporarily, and push their assets back to safe havens. And that's exactly what we saw this year. The only reason we saw the dollar boom this year is because there was uncertainty everywhere, right? There was uncertainty with the euro because of French politics, a few uncertainty around Germany at the start. It's not the start of the year, but sort of like, I think it was like the end of Q1, start of Q2. I think that was more around the tariffs and how that would affect big companies like Volkswagen, bearing in mind the biggest company within Germany, which is the biggest country, or the biggest economy within the ECB. So, yeah, it's hard to say because, bro, anything could fucking happen. But all I'm trying to say is I'm bullish. From an intraday perspective, I'll be buying the EU until otherwise, really. Like, I'm still looking to continue that same bias, and I will do. Well, I think that's the key to fundamental analysis, understanding which currency is going to have a good bias for the next, like, say, 6 months. sort of does help you tunnel vision on the best positions possible. Which at any point in your trading, you want to be at that stage, like, at any point. Even if you don't have a lot of money in a live account or in a funded, let's just say, you still want to be aiming for like 2-3%. I know you're not going to earn as much money at all by any means, but it's not the point. It's the principle of earning those certain percentages and going for those certain trades. I've definitely not placed as much trades as I have this year than I did 2 years ago. But my accuracy's been fucking far better. I had 100% accuracy for like the first 4 months of this year. Cool. And also this year I think there was a time span of like 2 months from when I didn't place a trade. Crazy year this year, man. Crazy year. But that's the game, right? But it's a good question, Rory, man. EU to 1.2. It's getting there. It will come there. Alright? It's gonna go to, put it this way, it's gonna go to 1.2, 1.12 before 1.12. It's gonna go to 1.2 before it goes to 1.6. Put it that way. Sorry, 1.16. Which is way more short term. I can't really see us continuing to drop the euro further down. Like, I don't think we're really going to continue lower than this level here. I think we are now looking to continue this dispersion. Like, looking for like the 4-hour time frame. I'm pretty sure still main sort of daily, weekly, monthlies are still to the upside. We've got 1.17 here, which will push the 1.8 mark. I don't know what I was writing here. That was the currencies. I'll go over the pound. We'll go over the euro in 2 sets, because the euro is the currency that's got a divergence, which is key to understand right now. But from the 4-hour perspective, we've just been continuing price on, right? We just want to see price to continue and go on forward. So again, I'm not going to see price come below the 1.6. And for me, it's just going to continue up. 1.2 is quite a big, it's big. And you got to think, if price is going to get to those sort of levels, it's going to have a lot of retracements. Do you know what I mean? Like, price never ever just moves up completely. Like, even just looking on this 4-hour time, fuck you, I need that CLT. Even just looking on the 4-hour time frame here, we've seen price has been very expansive recently, and we're nowhere near 1.2. We're going to see price have retracements. See price come. Wait. This is so laggy, I can't even draw, bro. Do I have shit open that I fucking can do with closing? I'm just gonna turn off that fucking blue for a sec, so my shit's bare lagging. We're gonna see price have retracements. Obviously, massive displacement within this area. I don't think price is gonna come back for it. Many times this year where we've seen displacement not get filled again. Definitely think we're going to see price continue up and just continue to that daily. Is it a day? I keep saying daily, but I don't know if it is. No, it's definitely not. Pretty sure it's monthly. But we've still got a monthly CRT to the upside, which I think is matching with DXY's CRT to the downside. Europe, and then EU as well. EU as well. What the fuck am I on about? GU as well. Yeah, GU as well has got the exact same thing. A lot further away. We can tell essentially how much stronger the euro is compared to the pound, which is why we want to continue price to the upside. But yeah, sorry. In terms of the euro, I hope this is not laggy, so I can actually fucking type and shit. But in terms of the euro. In terms of the euro, still kind of lagging, bro. We're looking at a pause of interest rates, and we actually had I'm pretty sure it was last week, or it might have even been sort of the end of the previous week. But we had Fed Schnabel, what I'm on about, ECB Schnabel, which is one of the governors. And she said that she's potentially looking at a hike of interest rates if we continue the graph we're at with good growth, and with inflation still sitting at target. Because that's another great thing about the euro right now. They've got inflation to target, which is something no other central bank has been able to do. Like, by any means. Like, literally by any means. Like, the US are just nowhere near. UK even further away, I'm pretty sure. Actually, I think we're pretty much quite similar actually in terms of percent. Inflation is perfect. And again, growth. That's the main thing as well. In Europe, we're expected to now to have a lot more growth, or a lot more steady growth, I'd say, because that's what's key. And this is what investors look for. They look for steady growth, and this is what everyone looks for. And this is why I always say, exact same way as in a trading plan, I want you to earn 2 to 3% on average a month. The same way as traders, or investors should I say, look for steady growth within an economy to be sort of long-term bullish or bearish on something, which investors will be. Short-term traders will just use it as a bias from an intraday perspective, but for investors, that's what they want to see for a country. And that's what you normally do when you invest in a country, right? You can do it many, many different ways. It might be bonds, but you invest in a long time. So if you see like a nice growth plan for France and Germany for the next 2-3 years, you can buy a 3-year bond. You're going to see that do very well for you. But just from an investment point, I mean, there's loads of other big perspectives, but just from an easy bond perspective. But yeah. Or mainly you want to put money into stocks, not bonds, to be fair. From that perspective, you'd rather put money into European stocks. Massively sort of depends on what companies you want to go for. But if you're going to see steady growth, then you want to invest in Europe, right? So you can do it in many different ways. Do you have to place a trade on 30 days? Do you have to place a trade every 30 days on most of the accounts? Yeah, you do, bro. Yeah, you do. But again, bro, it's literally like an activation trade. Like, it's literally like it could be anything, bro. It could be like 0.01 pip. Because, again, you don't have... actually, but then again, I guess it depends if your account has sort of lot size and consistency rules, right? Because you can't risk too less risk on like consistency. But yeah, you just place a small trade, bro. If you're with FTMI, ACG. I'm looking next year to start investing in stocks, etc. So this past 6 months of you guys learning fundamentals. Now I see once you learn it all in time, both long term and short term, exactly. And that's why again most investors do look at everything that we talk about to do with trading. But the good thing is that's the long term perspective, Junior. That's the thing, right? Because investors. I mean, what an investor is someone who holds something over time, right? A trader is very more sort of short term and a lot more intraday perspective. I mean, you can be a swing trader, but for me, in my opinion, I mean, you do have that sort of I mean, even swing trader, people invest in stocks over the course of 6 months to a year. And I mean, a swing trader is probably in a trade from maybe from a minimum, maybe 2-3 days to fucking a week, maybe 2 weeks or something like that. But investors is a very long-term thing. So this is why, in terms of bias, is doing the same thing that investors do. What do investors do? They look for a good steady growth or a good plan within a company in order to invest in a specific stock. The exact same way I would do as an economy. I'd look into a certain economy, and if it's, again, has got steady growth, then I'll look to invest in it. Trading stocks and trading FX, in my opinion, is very fucking similar, because I'm essentially going through the ECB, the Fed, and the BOE to understand how these economies are doing. The exact same way as you would do if you're looking into a stock to understand how the stock was doing. So I like that, because again, it also sort of lets you understand a bit more about long-term effects and understanding that a lot of stuff could change over time. So you need to have a hold into a stock that has somewhat, a company that has somewhat steady growth, has had good result over the last few years, good revenue, increasing in profits, and so on, and what, depending on what market they're in, is it going to be a continuative market? Is it actually going to last? Is this a cash cow? Is it something to invest in this year or next, or for the next 2 years, 5 years, 10 years? But that's the thing. It like investing is like investing is this, well, the same way you would look to analyze and invest, because obviously you don't just invest. You analyze and invest. So those investors do the exact same thing. Understand the fundamentals behind it. Again, charts are lovely, right? It's lovely patterns you can use and shit, sick. But a bias, man, is something that you can't get from the chart. You won't get it. You won't get it from the chart. That's just a fact. You won't get like the long-term bias of a currency through the charts, really. Unless obviously using the massively higher time frames. But I mean, even still, a lot of that stuff probably comes through 50% of the time, because a lot of economies change policies. There's a lot of stuff that changes over the course of half a year, especially at the moment. I mean, the amount of shit that we had this year was crazy, and that's why we switched a lot to risk on and risk off throughout this whole year, which is why this year has been so difficult for certain currencies, because we've had a lot of bias flip over the course of however long well, about 10 months, really. No, I mean, I started learning for the intraday, but as we have gone on a lot more, I say it ties over to long term. Got you. But yeah, no, exactly that, bro. Exactly that. And again, understanding each different economy will help you with a bias. Bro, why am I lagging so much, man? So yeah, EG is just continuing up. We've got that much stronger euro. Is euro at the prior week high? Yeah, it's fucking booming. Yes, it fucking is. Holy shit. How much movement have we had today? Holy fuck. We were like begging for some movement last week, bro. Where the fuck was that then? Now we're moving 50 pips from the Asia low. It's insane. It's insane. That is actually almost a jerk. Yeah, so a lot of news in the next few days, which is really important. So again, what we need to look for this week, and what we're kind of looking for, just so you guys know what to expect. So today we don't really have any news that's really that important. Going into shit that is fucking important is tomorrow morning at 7 AM. Right. We have the claimant wow, I said it wrong. I feel like I always do that. The claimant count change. Fuck. The claimant. So again, this is sort of the people, the amount of people that are claiming the benefits within said country, or said, in our case, what even is UK? What actually is it? What actually is UK? Like, what is it called? Anyway, I'm gonna let someone say that while I continue. I'm not gonna let that fucking consume my head for the next 5 minutes. So yeah, that is looking to come out lower, which is good for the pound. So we're probably gonna expect a nice bit of strength from the pound in the morning, from 7 AM. French flash. So we got PMI for both services and manufacturing at 8:15 for France. Germany, we got both PMI services and manufacturing then at 8:30, 50 minutes after. And then we've got the all of the Euro flash PMI after, which is looking to be Where he's looking to come out a bit lower, which is actually not great for the euro. Manufacturing's coming up for the UK at 9. I mean, wait, let's go back to Europe. Is it really that bad? Average earning index dropping by 0.4% is fucking dreadful as well. That's not good at all. Yeah, that's not really good for the currency. But yeah, German flash. Man, yeah, that's it. So manufacturing's expanding in Germany. Services isn't. In France, manufacturing is expanding. Services isn't. So it's kind of like 50-50 for the euro. Again, I feel like it's key moments considering what the US are trying to do to keep manufacturing steady, and yeah, we've still got where's France? I mean, we've still got France and Germany, both the services expanding, which is good. And then, so we've got the New York session. But then we've got pound manufacturing and services as well. And then 1:30 is when we got all of our news for the US. So this is when we have our. Oh shit! Wait, what? Bro, we got fucking NFP Tuesday, bro. Mate, what the fuck? No, mate, what the fuck is that about, bro? Is that really what we have on Tuesday? With NFP? Okay, right. So it looks like we've got NFP tomorrow at 1:30, which is going to be a fucking weird one. What the fuck? That is so strange, bro. So strange. But I guess, yeah, we didn't actually have our December meeting either. Yeah, bruv, it's tomorrow, man. That's crazy. I didn't even know that, bruv. I'll be so honest, I did not even know that as well. But yeah, we've got NFP tomorrow at 1:30. Holy fuck. And flash services and manufacturing, of course, are both still in expansion. Services looking to drop down a little bit. Manufacturing looking to go up a little bit. So again, that's not really too much of a difference. But NFP, bro. But NFP's coming up bad, boys. We're expecting about a 70k chop from NFP, which is not great at all by any means for the labour market within the US, which is one of the most important things to understand, or the most important data point to know in order to sort of dictate how interest rates will be moved. If labour continues weak, then yeah, we're going to have to continue to cut interest rates regardless if inflation's too high. If inflation looks to come down, so we've got inflation, that's Thursday, we'll move on to that after. So what do we have Wednesday? Just got the pound. That's legit. Just the pound CPI. Thursday we got interest rate for both ECB. So this is the week. You know, it's right. This fucking week, guys. Week is massive. I think it's previous NFP. I'm pretty sure it is. It should be, but then we also didn't have one this Friday. It's what day was Friday? Was it the 4th this month? No, it was the 5th. Oh yeah, but no, I'm pretty sure it is the one that just come out. So it's the one that should have been the start of December. So it is November data. So this one is the one that should have come out on the 5th of this month. But I come out 11 days short. I'm assuming so they could actually gather data. Yeah. So, I mean, I really should have done this higher. Plus, I'm lagging bears, bro. It's actually fucking well annoying. But Monday, nothing. Tuesday is when we've got the claim and count change, which is essentially pound strong. I'm just gonna do euro as a total. So PMI for the euro. It looks pretty it looks pretty neutral for the euro because again we've got expansion and a bit more of a contraction. So euro sort of nothing. The pound is good. I'm pretty sure. Yeah, pound should be bullish from it. And then we've got the US dollar, which should be pretty even with it as well. So pound really shining through there, to be fair. For Tuesday, is that all Tuesdays? Yeah, that's all Tuesdays. And then Wednesday is when we've got the inflation. Holy shit! Completely forgot we got the NFP. Which is massively dollar weak. So regardless of how neutral PMI is, we've got a very weak dollar coming through that NFP, which is just tomorrow, which is so fucking weird to say, bruv. A Tuesday NFP. And then Wednesday, we've got inflation. So fellatio, the GBP, which is looking, bro. Why is it lag when I write? Why does it just do that? I don't know. It's looking to come out. It's looking to come out lower, which is actually weaker for a currency. Really, lower inflation is weaker. Off print, obviously lower inflation makes sense because it means they can cut, but I would still sort of say it's still weak pound because it is lower inflation. And then we've got NCD GDP, which I don't give a fuck about. Thursday's a load of shit happening Thursday. We've got interest rates. We've got interest rates, bro. Let me write an R for fuck's sake. We've got interest rates, which is pound week. We've got interest rates from ECB. Which is looking to be sorry, looking to polls. What am I talking about? Looking to polls, which is obviously, I guess, kind of neutral. But then I also guess because it's a divergence between the UK cutting and the US cutting, kind of does make it bullish because of the divergence. And then what else we had Thursday as well? We've also got the inflation out of the US, as well as unemployment, which unemployment's looking to come out worse. Fuck it out. So and then we've got CPI, which is pretty much doesn't have expectations for that actually, so we can't forecast that. Let's just go with that employment. So unemployment. Bro, I don't trust this pen, man. I've actually got trust issues with this fucking pen. Unemploy. So that is obviously looking to be weak dollar. That is unemployment claims. Unemployed is calm. And then we've also got, we can't see that inflation, but we've also got, no, I think that is it actually. And then Friday, I'm pretty sure we don't have anything. Oh no, yeah, we've got the interest rate hike from the BOJ. Bro, holy shit. So Friday we are looking at Japan to hike interest rates. Just move. Fuck are you for that? Interest rates. Hike of interest rates is positive, especially again the divergence for it as well is what makes it really positive. Not gonna lie, that's what makes it a lot better. So this is how our week pretty much stands for our data. If data does come on forecast or the same way, it doesn't have to come bang on the same digits, just the same way. Might depend how sort of moderate the effect is. A claimant count, which is bullish at the start on Tuesday. PMI, which is sort of neutral euro, neutral dollar, but strong pound. So expect sort of Tuesday to be strong pound. We might even see some nice GU buys, especially because we've got the NFP at half one, which is expected to have way lower employment, which is kind of better for us due to claimant count being also beneficial for the buys. Wednesday, pound bearishness. That's all we've really got. We've got inflation, which is looking to come out lower, which is weaker for a currency. I guess it is still a push in the right direction in terms of where the BOEs want inflation to be, but low inflation off print will be weak for the currency. So from an intraday, it'll probably be weak for the pound. Thursday, interest rates, we're looking at a cut from the from the BOE, which is obviously bad for the pound. It will weaken the currency as yield less will return. Euro, vice versa. We've not got higher interest rates, but we've got a pause of interest rates, which is keeping the strength of the euro, but also the divergence between, considering last week that they cut the interest rates from the Fed cut interest rates, and now this week we're looking to cut for the BOE, but not the ECB. That divergence between interest rates is key. The only one out of these major ones that is looking to pause interest rates. Obviously, Japan are looking to hike. That's why Japan is also very strong right now. And also, unemployment is looking bad coming from the US on Thursday as well. So Thursday, your best positions, again, my fucking EU buyers is when those positions are going to be best, man. But that's pretty much how the whole week should pan out. So take a note of that, boys. Take a fucking note of that. And obviously off the back of that, we do still have CRT. Bro, I'm lagging bare, isn't it? Boys, am I lagging on stream? Because, bruv, I actually have been not being able to use TrainerView. Or is this TrainerView just bugging? Because nothing else is bugging for me. Like, I've literally got live I've got live news articles being pushed to me by the minute. I can't load this chart. Is TrainerView just always down? Like around Christmas? Is anyone else getting that shit? I wouldn't say look to buy it because obviously we've already broken the high. For me, that was like the best TP that you could have really got. If you went for more than the Asia high and more than the priority high, I mean, I wouldn't have aimed for any more than that. So, we might see price sort of have a bit more of a retracement to feel some imbalance on the lower to then continue higher. And that'll be that 4-hour time frame. So keep focus on EU's 4-hour time frame, so you can understand where price is looking to go next for the targets, for where you can start entering, and then obviously looking at that retracement on sort of the 1 hour. But the 4-hour chart is what you want to be looking at right here. If coming into this imbalance, continued up, teed up. No pregnant retracement. Continue up. We should have what we should have next. But boys, I'm gonna jump off. Pretty much explained what happened through London, what we should see for the next week. If you was able to get an EU, perfect. Annoyingly, I stopped last week, so there was no EU trade there for me, man. But we'll see how this week goes, man, because fuck me. I mean, the manoeuvres we've had today from the EU, GU, and also gold as well. Gold's had a big movement today. Is nuts. Dollar's had a decent movement. London session was fucking quiet to around sort of like 8. Dollar didn't move out of the range at all. Did make it a lot painful. GU didn't move out of range till 9, 10. EU was a bit earlier. We had that first break 6.25, and then we broke again at like 7.58, something like that. But boys, love you all, man. Catch you man tomorrow, bro. Sweet.